As part of Fáilte Ireland's financial planning section on the Business Supports Hub, this video will give you an understanding of what you will need and what to expect when meeting with your financial institution. This is your retail, commercial, or pillar bank, credit union, alternative lender, or other financial lender. Throughout this video, I refer to bank or lender, which would include any one of these financial institutions. A bank or lender will want to invest in a sustainable business. It is really important, therefore, that you understand what is your business, what sets you apart from your competitors, and how sustainable is your business for the long term. Really understanding your business and being able to communicate this is an important part of any business plan or funding application. A bank will want to know who are your customers. Are you dependent on just one type of customer group? Or do you have a plan to attract and source other relevant customer types? What about your competitors? Do you know who they are and why customers use their services as opposed to yours? Have you completed a competitive analysis? This can be a very informative document and can highlight your key selling points as well as any gaps you may have. A bank will also want to know who operates the business. Are you, as an owner, involved in the day-to-day running of the operation, or do you have a management team? How did you manage during COVID-19? Were you able to create new revenue streams? Were you able to reduce costs? How did you approach any decisions that you made regarding the business? One of the key questions that a bank will ask is if you can achieve the financial projections that you have forecasted. Ultimately, while we rely on customers to buy our products and services, the operator of the business has a big impact on driving revenues and running an efficient operation. Therefore, it is important to be able to demonstrate your team's ability to do this. When approaching your bank or lender, know what it is that you are looking for or where your financial challenges are. For example, many tourism businesses are seasonal, and during the low season in January and February, may have higher outgoings than incomings. In this case, a business may have an overdraft facility to help with cash flow on a very short-term basis. What are your challenges and what are your needs? Lending requirements will then be based on this. Working capital requirements are for day-to-day trading, your current assets, such as stock or cash on hand, minus your current liabilities, such as creditors or revenue payments. Your working capital requirements will be based on your seasonal trading and monthly cash flow needs. Some businesses may have built up legacy debt on their balance sheet from previous loans, creditors, revenue payments, or other liabilities. It may be worthwhile from a management and cash flow perspective to consolidate these debts into one facility. Businesses constantly require further investment, which can take the form of expanding, upgrading facilities, replacement of furniture, fixtures and equipment, or other capital expenditure, CapEx, requirements. If the funding requirement is for expansion, you will need to illustrate that the investment will make a satisfactory return and yield additional cash flow. In looking at investment, there are a number of considerations. What are you looking to invest into and how much will you need? What return on investment will you achieve? And what will be the impact on your financial projections, both from a sales and cost perspective? There are a number of financing options for your business. An overdraft, as mentioned previously, is a short-term funding option for working capital in a seasonal business. As overdraft facilities can have higher interest rates than many loans, they are not considered a way of medium-term lending. The overdraft should return to a zero balance during the trading year. Short to medium-term loans are used to finance sudden cash issues such as working capital or sudden changes to the business, as well as a balance sheet restructuring. If you have a small CapEx requirement, for example, a medium-term loan can be appropriate. Long-term loans or senior debt is used to finance bigger projects. This loan is paid off over a longer period. In all cases, you need to match the term of the loan to the expected useful life of the asset. In looking for any loan, it is important to understand when the payments will be, the interest rate, the length of the loan, if there is an option for an interest-only period, say within the first few months, and the security on the loan. Asset finance as an option is widely used by many tourism businesses. This type of finance is used to fund equipment, plant, and machinery. In looking at asset finance, it would be worth reviewing the benefit to your business of a lease or hire purchase. In a lease, the ownership lies with the lessor, the company leasing the equipment to you. And in hire purchase, you, as the business hiring the equipment, has the option to purchase. Many leases provide a buyout option at the end of the lease term for a nominal sum, but this would need to be clarified with the lessor. Each option has both accounting and tax implications and should be discussed with your accountant to see what is the best solution for the business. In advance of going to any bank or lender looking for funding, it is important to be prepared, as otherwise this will delay your application and the funding process. Know how much you require and what type of financial support your business needs. If this is complicated, or if you need further help to determine an appropriate financing plan, speak with your advisor or accountant. The level and type of lending that you require will dictate the information the bank requires. For example, if you are looking for an overdraft facility, the paperwork required will be much less than if you were looking for a €5 million loan. The capital structure of a company, which is the level of debt and equity in the business, differs for every organization. This may have an impact on the lending or debt levels in the business, and each bank or lender will have their own specific credit policy in respect of this. As previously mentioned, the level of documentation will differ depending on the quantum of debt. Tax compliance. Ensure your tax affairs are in order and that you have your tax clearance certificate or number. Have your latest 3 years of audited accounts available. The banks will want to know your credit history. Have you completed financial projections for the business? The bank will want to see that the business can generate sufficient profit and cash flows to service the debt. Each bank will have a specific credit policy in terms of debt service capacity. It is therefore important to produce financial projections that you can stand over and that you understand, as these may be cross-examined. It will be worth preparing 2 scenarios, a base case and a best case, which will show the minimum levels of sales that you expect, and then increased sales based on different business or economic circumstances. Scenario planning can illustrate your understanding, not only of your business, but of the business world in which you operate. A P&L and scenario analysis template is available on the Fáilte Ireland website. Do you prepare quality management accounts? These will provide more detail on the operation than your audited accounts and will be reviewed by the lender. It is good to provide 2 to 3 years of management accounts. Banks will want to have an understanding of your debtors and creditors and your ability to manage these. An aged debtor and creditor listing may be requested. Do you have any other liabilities? If you're applying for a loan, a lender will want to know what other liabilities or loans you have. Do you have a loan with another bank? And if yes, what is the security on this and the payment terms? If your business accounts are not with the lender that you are applying to, then they may request to view 6 to 12 months current account statements. If you are looking at new lending, a large capital investment loan, or new business opportunity, for example, you may be required to produce a full and detailed business plan. A business plan template is available on the Fáilte Ireland website. The worldwide pandemic of COVID-19 had a significant impact on the tourism industry and required businesses to take drastic measures to cut costs, develop additional or other revenue streams, and relook at every aspect of their business, both operationally and financially. If you are confident in the business decisions that you made and/or how you traded through this period, then this may be worth highlighting, validating your ability as an operator, because a bank is lending not only to a business, but to people who will operate that business and help deliver cash flow. Each lending application through a bank or lender is done on a case-by-case basis and will be based on the quantum of debt or level of lending you require. Smaller levels of lending may be completed in your local branch with your relationship manager. Larger or longer-term loans may go through a credit process in the bank, where your proposal is reviewed by a credit team, who will review your application to ensure that it is a viable lending proposition. In meeting with your bank and in looking for funding, it is important to not only be prepared with the relevant documentation, but to really understand your business and your skills as an operator. If you think you may need further assistance from your lender, then you should communicate with them as soon as possible, as applications and gathering your documentation can take time. A lender can then advise you of the timing requirements and their process in relation to your application. Whether you are looking to meet with a lender now or at a later date, there are certain best practices that you can do which will be of benefit to you now and in the future. Do you keep good management accounts? You should prepare monthly management accounts that track the different departments within your business and cost categories, such as payroll or cost of sales, for example. Having monthly accounts will help you to prepare future budgets and make decisions based on the fluctuations in business levels. Tracking key performance indicators against budget, last year, or industry can also help with evaluating if your business is in line with expectations or if there are specific areas that need to be reviewed. Consistently reviewing and evaluating KPIs can help with improved business performance. Have you forecasted your business needs for the next 12 to 18 months? While it can be difficult to predict demand levels, particularly in uncertain times, looking forward and having a plan is important. While a plan may be adjusted, it will allow you to make prompt decisions as you will have information readily available to you. All tools, templates, and guidance documents to support this video can be found on the Fáilte Ireland Business Supports Hub. Thank you for watching.